Hi, Jerht Santos here of the Coach PH. Remember to click the subscribe button to be updated with our latest videos. You've been in the market for 35 years, been burned, strengthened from previous experiences. You've read so many books, gone through so many things. What was the turning point when you said, okay, this is the system that I'm going to follow until retirement and beyond that?
Well, it's still evolving. It was not one system that I had to stick on for the longest time. No? Because I remembered also because again, the risk side of me, I had a particular rule that no single investment will have to be more than 5% of my equity holdings. So that forced me to hold, well, if it was 5% each, that's 20 stocks, right? But I had 30 stocks at one point in time. So I had my own portfolio of 30 stocks because of that rule that I imposed upon myself. That means also imposing some rules on the risk side may have limited my upside because, but along the way, I realized that there could have been a better approach rather than just purely on the risk side. Because I remember an interview with Warren Buffett where he was asked, what is your ideal number of equity holdings? He said, I think he compared it to basketball coach at that time. I think the NBA champions was the Miami Heat. As we know, the coach is Phil Spolstra. He said, if you're Coach Spolstra and you're in the finals of NBA, so you have 12 or 13 players, would you spread the time on the floor evenly among your 12 or 13 players? And obviously not. You will have your star players practically playing most of the time. So that was an eye opener for me. I said, I had forced myself to hold 20 to 30 stocks because of my concern for the downside. But could have been missing the upside potential by focusing on which I think are the stocks that will do well moving forward. So that kind of changed my style. And remember, I think this was already post-retirement. But the Miami Heat were champion. That was after I retired. So, but for the longest time, I think that was a mistake that I thought I was focused on managing the risk, but also forgetting investment also about the returns. So that has changed a bit. But in every step, the common thing is that every investment that I buy, every stock that I buy, there's a story behind it, unless it's for speculation. Right. As I said, I mean, I allocate certain amount for speculation, not a big amount, because this is money really for taking care of my needs post retirement. So I could not speculate on those amounts.
What amazes me, sir, is that even if you've been in a market for more than 3 decades, the mindset of being a student of the market is very important. I mean, being open to improvement. I would say that's a striking quality from what you're sharing to me.
Another thing, I think over time, and in my readings as well, you realize certain patterns that recur. I might make a wrong call on the market at some point in time, but my strategy is something like this. The way markets move, for instance, you're coming from a down market, a bear market. What usually happens that the large caps will be the first to move. All right. So if my call was I still had a negative view on the market, and the large cap suddenly started moving 5%, 6%, 10%. So I would have been left behind already. So what we've seen over time is that a similar pattern recurring. You have the large caps first moving up, let's say by X%. And then when it becomes a bit expensive, you have the second liners moving by X times 1.5 or X times 2. You call this beta in finance. They have a higher beta that they move 1.5 or 2.5 faster than the market. But it works both ways. Because if the market's going down, then these second liners will go down much faster than the market, the large caps. And then after that, after the second liners move, it becomes the third liners or the basura stocks, what we call it in the Philippines. These are the stocks that you start seeing to make big moves. And so when you see that the top gainers for the day over several days or weeks will be the third liners or the basura stocks, then you know that the end is near. So there are certain things that I have observed over time that has guided me in terms of not just looking at fundamentals, okay, PE ratios, and, charting techniques, but certain patterns that have evolved over time. So even if my initial call was wrong, I was still bearish and the market moved the other way, I can catch up by positioning the second liners. So I have done that in the past, and I would say that over the long term, I had outperformed the indices, but I don't track it year by year. But that was a strategy that worked for me.
I guess to borrow the analogy of having a basketball team, it's like going on a draft. Like you're picking the players, the best players for your team or for your portfolio. What were the key fundamental and technical metrics do you look for in a stock before buying? You mentioned story, having a story. What would be the other specific details that you were looking for?
Yeah, in my readings, when I talk about the books by Peter Lynch, he has a rule of thumb. Again, this goes back 20 years ago when interest rates were much higher. And he said he considers a stock cheap if the expected growth rates of the company will be equal to the PE ratio.
Mhm.
What PE ratio? Meaning, if the expected growth of the stock will be 12% per year for the foreseeable, 3 to 5 years, then it's cheap to buy the stock at 12 times. So if the stock is growing at 20%, 20 P. If the stock, particular company, will not grow by, for instance, it's growing at 3%, even a 5 PE will be expensive because you just be looking at the 3 PE for that particular stock. So because some people think they focus on the cheap stocks. It's cheap for a reason at times because the growth of earnings will not be there. So it's not about the cheapest that you can find. And I remembered at one point in time in one of my talks, I was asked, so, how do you define when a stock is cheap or expensive?
Right.
I relate it to the expected earnings growth. So you have to have a broker who's very good at trying to forecast the earnings for the next 2 or 3 years to give you a sense of which are the stocks. So you can compute the PEG, price to earnings growth. So that could be a basis. But remember, those were the times when interest rates were relatively high. So I said at that time, my measure for the Philippines that growth should be twice the PE ratio. Because the alternative of going fixed income, it will give me 6%, 8%. In the US, it was at that time around 4%. So I said, the growth should be much faster than much higher than the PE ratio. So those were the initial things that were very important to me. So it was not just not okay understanding there's a story behind it, because there could be a story, but it could have been priced in already, and the
Right.
stock is moving at or is valued at very expensive PE ratio. Some people are thinking, well, a PE ratio of 50 might be too much. If you look at some of the FANG stocks, FANGs meaning Facebook, Amazon, Apple, Netflix, and Google, some will be trading about 50 times. But if the earnings growth will be 50%, then that's going to be fine because over time the PE ratio will be going down rapidly because of the strong earnings growth. So those are the key things. And by this time, because interest rates are also low in the Philippines, your alternative of investing in fixed income will be low. I'm using that. Growth should be roughly equal to PE ratio. That will be a good indicator in terms of identifying, aside from the story, because again, markets are forward looking. That's one thing that people sometimes forget. It's not about the GDP growth of the country. If you look back in 2009, the GDP of the Philippines just grew by 1.5%, and yet the stock market grew by 63%. It's forward looking. It's what's going to happen next, not what is happening right now. Again, that's clearly illustrated last year. When the lockdowns were implemented, you see the stock market moving up from 4,000, 4,500, all the way to close to 7,000 by the end of the year. And yet we were in lockdown.
Right.
Because the government was addressing the crisis. Hopefully that they will be able to halt the increase or spread of the virus. So it's one step ahead. In the same manner, during the last global financial crisis, 2007, the problem was subprime in the US. But if you look at the Philippines, you have cranes and construction ongoing in the fort. So we were not part of the problem. So when our markets went down, I knew we would be one of the first to recover. So very simple things. There's contagion, yes, but you will have to identify, are you really part of the same problem? So those are key things, when you look at the opportunities in the marketplace. On trading on the technical side, if you plan on doing that, you have to make sure you have an exit strategy, whether it's a cut loss or when do you take profits, depending on the chart patterns you're looking after, whether it's pennants, flags, cap with handle, head and shoulders, all those technical terms. But you do that, you better make sure you did your research also about understanding those patterns. Because I also made that same mistake. I bought some stocks based on technicals, but over time I forgot it. I thought I bought it based on fundamentals. I didn't want to realize a loss. And it took me a long time to recover those losses. So some lessons learned. Sometimes we become very stubborn. We don't want to admit to ourselves that, well, that was not the best decision we made when we bought that stock. Oh, I'll just hold on to it and I'll buy some more average down. Sometimes averaging down may not be the best for you because you're putting good money after bad money. So, daming lessons, pero mahirap sabihin lang ng simple what works and what does not work. Over time, advantage ko lang is that, I've seen those ups and downs. And then later on, the Asian financial crisis, I realized that, well, we are not on our own. We're not an island. The global economy is interconnected. And so we have to understand also what's going outside the country. If you don't do that and you just focus on what's happening locally, then you're missing out on things. You would have missed out that, well, markets were headed down because of what's happening in the global financial crisis, global financial crisis as well. And then eventually COVID. Those are the big three global events that impacted heavily our financial markets. In the latter part of my investing, then I was just not focusing on the outlook for the local market, but I have to understand the outlook and the risks as well. Because any investments, there are risks. You have to understand that risk. And there are risks specific to industries or companies, and there are risks, country risks, and there are global risks that impact financial markets. And again, seeing all those things happen in the past have made me better understand how to expect the behavior of markets moving forward.
Right. So I remember from what you shared, sir. I remember the saying, when America sneezes, the whole world catches a cold. And
Pneumonia pa nga eh.
yeah, and I actually appreciate, because in your post, even before the COVID correction happened, you were really warning people already that the markets were overheated. And when the U.S. market was down big time, when it started gapping down, it was also a signal for me, even if the local market wasn't reacting yet, to get out, to liquidate the position, to take a defensive stand. And so thank you for sharing that. So I think that's very important, to know what's happening outside the country, not just focused on what's happening here. Allow me to go to the selling side. So you mentioned about buying based on technicals or buying based on fundamentals. So how about the selling side? How do you handle the selling side?
Yeah, that's the most difficult thing, actually, selling. I think people think that, for me at least, not the buying that is important. The more important thing is, when do you sell?
Right.
And when do you cut losses? Some things that I've really seen work for me was that when I look at volume and price, there will be three things that you will notice. Just get any stock. Look at the chart. Let's say look at the historical charts for 10 years, or all the historical data available to you. And you will notice that usually when the prices are going up, you will see a big spike in volume, and usually it signals that it's very near the top. Sometimes it corrects and then goes up again, but in the same manner, you will see certain points when the stock price is going down, and suddenly there's a big volume. Normally, it indicates that near-term bottom is at hand. So volume and price will give me some indications, but again, most of the time, it will not give you anything. Because most of the time, well, okay, the volume and price is going up or going down, irregular patterns, you don't see anything. One thing that you can use, because a lot of people start buying when there's so much talk about that stock. And again, if you look at the volumes and you see the volume spiking up, that's a clear warning already to stay out of that particular. Even if you know that over the long term, you still want that stock, you may want to sell in the short term and then buy back again. So that's one thing that I use. If it's technical, again, I also use technicals for establishing my either cut loss or my take profit level. And it's advisable even to have a rolling stops. If you're making money already, you can at one point in time when I already feel that my price targets have been reached,
Mhm.
so I would tell my broker on 3 successive fluctuations going down, sell me because I still want to ride the wave. You
Right.
know, getting out too early, you might miss a long wave. So that's my instruction early on. So later on, it changed. Malaki na yung profits ko. When that stock is down 5%, let's take our profits and sell. Cut loss, if it's technical, pennant, you think it's gonna break out on the upside, but it breaks down on the downside. Cut loss ka now, pure technical ka. So those are the things, little things that I used early on. But still, even at this time, 35 years into the market, it's still something that I'm working on. I have gurus as well. By the way, meron akong the best guru in town when we talk about technical analysis. I won't mention his name here. If he will see this video, he knows who he is. So purely technical. Pero grabe. I mean, lahat ng positioning niya, I'm buying this because my upside is this and my downside is this. Parang always 1:4, 1:5 yung upside and
Wow.
downside niya. On pure technicals, and he will tell you why, purely on technical, why this is a buy at this level and this is the cut loss. And then as your price targets are hit, may trailing stops ka na kasi you want to protect your gains na.
Right.
I mean, and he could show him a chart without telling him what a company is. And he will tell you based on charts, this is my reading of that. And maybe not the time to buy in, even currencies, even metals, even Bitcoin. I mean, yung calls niya, grabe. Grabe. I mean, there's a group of us in that Viber group that, he shares his views. I attended a seminar some years back on Elliott Wave, use Elliott. I remember that. I think it was in 1980s. It was a time that Meralco was listed. I can't remember right now what year that was, but I know or maybe 93, sorry, 93 maybe. But it was time that Meralco was listed. And I attended this seminar. And then, at that time, we still didn't have PowerPoint. Lahat naka-acetate pa. I don't know if you still
Yeah, I
are
was
familiar with the use of
yeah.
acetates, no?
Yes.
Okay? Xerox mo, tapos acetate mo, tinatak pa mo. So, he talked to us about Elliott wave theory. And as a final exercise, it's a 1-week course for Phoenix. And then at the end of the 1-week course, he showed us a chart. And he covered the heading. He says, here's the price chart of orange juice. And where do you think is the price headed? I think at that time the price was 26.30 or thereabouts, if I remember right. That's stuck into my mind. And okay, somebody said, well, based on what we learned, the price is going to 23 something, 23.50 or something. Right? So are there any different opinions, views from the class? The class was unanimous from 26 something, 26.30 down to 23.50 or something. And then, okay, so he removed the heading. It was a peso dollar exchange rate. All right, so the whole class was just surprised. We were concluding that the peso will appreciate. And it did appreciate to practically the call of the class based on what he told us. And I said, this guy knows something I don't know. So at that time, I really spent, all the books that you can see of Prechter, I have that already. I said, I have to learn this technique. So that was just purely amazing. But, again, while I knew technicals could work, if you're doing that, you will have to spend a lot more time at reading the charts, 300 charts per day. And for me, that's no longer an option. Maybe when I was younger, I could do that, but also work back on because you have to focus on what you do best. If you're spending a lot more time doing that, then you're forgetting that part of achieving your own goals will be work hard for the money and then, also set aside money regularly for investments for the future and then make your money work hard for you. Don't forget there are 3 legs. Okay? Some people think, well, I will just focus on trading even at work hours. They will be trading. That's not how it's going to work for you because you have to improve on your main line of business, profession, your your work, your job.
Right. Great pieces of advice, sir. Just to summarize, when you buy something based on fundamentals, you also want to consider selling based on fundamentals. When you buy something based on technicals, then you need to have your cut loss point, your take profit levels. Hence the adage, cut your losses short and let your winners run, right? To really maximize that move.
In the next video, we will talk about PhilInvestor's risk management principles.
My next question is, how do you manage risk? I know you mentioned it a while ago, but just to be more specific, how do you handle the number of stocks in your portfolio?
If you have any questions in this video, please feel free to comment below. To get a copy of PhilInvestor's book recommendations, click the links in the description box.
Thank you for watching. Click the subscribe button and see you on our next video. God bless you.